Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, September 28th, 2016. Markets initially opened higher only to sell off. You're looking at the intraday chart of the SPY here. Each candle is 10 minutes long. So again, this is where we opened today. You can see how we opened higher right into a gap fill. That's very important, folks, because that is resistance. That's where you would expect the markets to pull back from. And that's exactly what happened. So markets opened there, sold off nicely, came down, and then we put in a little bit of a bottom here, kind of an arbitrary level. We didn't hit this trend line. We just kind of came right in here. What caused the bottom? The answer is very simple, oil. So oil was selling off on oil inventories till right about there, and then oil started to turn up. Then you got news out from OPEC that they're supposedly planning a production cut for November, and oil just ripped higher, and that's why the S&P got a big supercharge. You can see it right here. See this green candle here? But now we're coming back in a little bit towards the end of the day. But ultimately, that supercharge right there was oil spiking up dramatically. Oil was trading up the whole way here. Obviously, certain individuals got the information ahead of the general market. But bottom line is, that's what caused this market to make new highs of the day is oil's move. You got huge moves in Chevron. Take a look at Chevron today. This is a big move in Chevron, guys. You don't see Chevron up almost 3% very often. Same thing with Exxon. Take a look at Exxon here. Look at that, up 4%. I mean, these are two components of the Dow Jones Industrial Average. So think about the weighting there. Huge weighting. Huge move. 4% on Exxon. Okay? So that is exactly what's carrying the markets. If you didn't have this move in oil, if oil was flat or negative today, you would see the markets down. We would be back to the lows of the day from earlier on the SPY. All right. So if we go back to the S&P here, you can see here was the low of the day. I want to show you the USO chart next because I want to prove to you that when oil turned around, the markets turned around, and it's correlated perfectly. Because again, let's take a look at that. So look at that time of day. All right, right here. All right, and then let's go to the USO chart, which is the oil chart, and look, same time of day right there, and look at the oil chart. And this is what I mean by people obviously got the news ahead of time instead of the general market before it was announced. And the reason I say that is because look at this move up here, all this whole move up, news didn't hit until right here on this green candle here, and then we had one more up candle, and then oil's pulling back. And notice how oil's pulling back, and then look at the spiders, the S&P 500. Look at it pull back with oil. So again, it's almost a one-for-one correlation here today, and that's what is driving this market. And again, it's not like the markets are up that much. 60 cents is not a lot of upside, which is one of the reasons why I remain generally bearish on the markets. All right, you've not seen, considering how dovish the Fed was in the last, commentary, and let me just go back here. I want to show you this. So this is where the commentary came out from the Fed, and you could see the move up, right? But then we came all the way back in, and then we've moved up again. And then again, even with oil spiking like this, you're only up 63, make that 65 cents now on the trading day. To me, this is very weak price action. And granted, listen, I mean, anything can change on a daily basis, but ultimately, I would be very concerned if I was a market participant who was overloaded on the long side. I don't think it's a problem having some longs. For instance, I love VRX. This is one of my favorite charts, mainly because of the weekly chart pattern. Look at the weekly on this. I mean, this is one of the prettiest weekly charts you're ever going to see. Let me remove this trend line here. But look at that gentle consolidation. So you had this beautiful move up, and then look at this gentle consolidation on top of the 20 moving average. When I say this thing could pop, I mean it. I mean it could go all the way to the 50 MA, which is around $50. And you're only trading at 26. That would be almost a 100% move on VRX to $50. Incredible, right? So again, I mean, there are pockets that I like on the long side, but a majority I don't like on the long side. I think, for instance, the reversal on Alibaba today. Take a look at this, guys. This is a huge reversal to me. Look at the 10-minute chart. So early in the day, look at the volume. This is very important to note the volume. Early in the day, Alibaba opened higher and had this one candle pop. And then all of a sudden, volume came in on the sell side, and you basically went straight down to the negative side. And then look at it, once lunch came, the volume died out and floated the stock up. Now you're getting a little bit more volume, and it's going down again. What's this mean? Well, whenever you get selling volume, it's anytime you have volume in the market, which is the first hour and the last hour of the trading day, those are the main times when big institutions can unload share size. They can't do it during lunch because if they try to unload 10 million shares over lunch, they're going to crash the stock, right? There's just not enough buyers there to support it. The only time you get enough buyers is early in the day, late in the day. So when you see a stock get pounded here, and you can see the volume candles of red, very high, right? That's institutional selling. And then look at how lunchtime comes right here, all right, 12 o'clock right here, and volume dies out right here, and the price slowly floats up. That's the small investor buying again. Generally, small investors, they get hyped up on these stocks that are at all-time highs like Alibaba was, and they'll buy. And then look at the volume starting to uptick just a little bit, and it's enough to curl the Alibaba chart back down. So, I mean, this is a heads up, shorting sell. This is the institutions unloading, and while they're not right on the dot always, they're generally right, folks. So this tells us that within, a week or so, I'm sure Alibaba is going to start to turn down pretty heavily. And I love spotting these characteristics on the chart. I mean, things like this are money makers. And I'm actually short Alibaba, actually, believe it or not. So, worth the research center in the money stocks, we're already short. So, ultimately, these are the types of things we look for. We look for these heads-up signals in the charts using the PPT methodology. We teach it to our members here. Come join us. There's a 7-day free trial to the research center. Get involved. Get going. Make some money with us. Come join us at inthemoneystocks.com.